All right, hello everyone, welcome. My name is Chris Fernari, I'm the editor of Brewbound, and welcome to Brew Talks LA. Thank you to Golden Road for hosting us. Big round of applause for Meg and the team here. Thank you guys. Apparently this is winter in LA, so t-shirts for guys from Boston. And I guess Brian's acclimated. You're originally from the Boston area.
I grew up in Boston, been out here 25 years.
So that's why you're like hunched over and freezing right now. Well, anyways, for those of you who haven't joined us before at a Brew Talks, basically what we do is we travel around the country. We stop at amazing breweries. We host meetups like this for around 100 or so folks. I think. Hello. I think about 50 or 75 people here so far. So thank you guys for showing up. I see a lot of familiar faces. The folks from CBA are here. They came out in force, so thank you for always supporting us. And also our sponsors. We couldn't do this without them. PubKeg, Vicinity Brew, Bank of America. Thank you guys. This is our last stop of the year, and hopefully our best.
Yeah, very good.
And without further ado, I'll introduce Brian Mulvaney from Bank of America, who's agreed to join me for the next 20 or so minutes and talk a little bit about investment strategies for craft brewers. Brian does a lot of lending in the space to both breweries and wholesalers. Used to work with Golden Road as well.
Yep.
So a nice connection there. And yeah, I guess you share a little bit more about yourself. Talk to me about some of the clients that you have and what it is exactly that you do.
Yeah, it sounds good. So I have the good fortune of being the beverage banker for Bank of America. So I get to travel the country and work, as Chris had mentioned, with both the wholesalers as well as the brewers. Then we also cover the non-alcoholic side as well as the wine and the spirits sectors as well. So we really cover, or the bank is active in all things beverage. But in particular, and what's relevant to us tonight is beer.
Yeah.
So with the craft, with the beer world and the wholesalers and the brewers, the bank, we've got a little over $2 billion in commitments out to the industry in the U.S. Globally, we have much more. And deal with, I'd say, just about 100 clients between the wholesalers and the brewers.
And you're seeing much more interest nowadays in the services that you guys offer from sort of the craft brewing sector. But traditionally, you guys were more geared towards the wholesalers, right?
That's correct. So the origin of the Beverage Finance Initiative was actually really in the Coke and Pepsi world, when Coke and Pepsi was doing all the roll-ups of the independent bottlers. And as that finished its cycle, if you will, they're all owned by the Coke and Pepsi folks now, we started looking what was happening in the beer wholesaler sector. So we have financed most of the major players in that, and then worked with many of the independent, family-owned beer wholesalers throughout the country. And
now you're sort of transitioning more into lending to breweries. What's enabling you guys to do that?
Well, certainly we're all experiencing this tremendous growth, right? So we're seeing the sector really emerge, with some players starting to come up and going from small, smaller local brewers into regional brewers, and we've got a handful of national brewers now as well in the craft sector.
How many beer clients are you guys actually working with? Brewery clients, I should say.
I'm going to be a little cagey on that. We're we're working with a number. Some of the folks I can mention, because we have public press releases out, would include Anchor, Brooklyn, CBA actually is one of the brewers that we bank. And then Golden Road, as you already mentioned, is one of the others. Locally down in San Diego, Pizza Port. But those kind of limit to the folks that we've already had public disclosure of who are borrowing from us.
And what are those types of businesses looking for when they're coming to you? I mean, obviously most of them are trying to finance their growth, I would imagine, all of their expansion efforts. But what are some of the questions that they typically ask you, and what are you looking for? Sure.
Well, I think the names I mentioned run the full gamut. So, when Gina was looking to start Pizza Port, it was really, how can I borrow any money to open up my first restaurant? So we provided them with an SBA loan to get them started. With Anchor Steam, they were looking to do some capital expansion into their brewery up in San Francisco, and asked us if we could help support that. So that was, again, capital expenditure growth assets. And then CBA, we have been a lender then for quite a while. And particularly most recently with some of their initiatives they just announced on their brewery expansions, that's part of what we're going to work to help finance them on that. So it really has been all about financing their growth in the craft brewer side.
Yeah. And
on the wholesaler side, it's actually quite frankly been much more about mergers and acquisitions on that, or family succession planning. One family member looking to acquire the other family member's shares.
Interesting.
Yeah.
So what have you learned, I guess, from sort of the wholesaler side that you guys actually can apply to the supplier side, the brewery side? You know, what are some of the lessons there? Because that's where you guys got your start, and obviously, kind of that helped you guys transition into banking a lot of the breweries that we see now. You know, especially the ones here in LA.
Yeah. Well, I think that one of the biggest areas to take away from working with the wholesalers is truly understanding the marriage that happens between the brewers and their distributors, and understanding how important that is, and how valuable that is to both sides, call it enterprise value for their businesses. So really understanding the dynamics of the industries, particularly that nuance that we have in the regulated environment. Right.
And that's one of the factors that you guys look at when you're looking to invest in a brewery.
Yep.
So let's talk about some of that lending. What do you guys take into consideration when you're going to make an investment? What are some of the factors that you guys look at? Are you looking for a brand, or are you looking for a management team? I mean, what are you looking for?
Yeah, the answer is yes. So of course, so it's the same thing that you're going to get from your potential equity investors as well. And you hear this quite a bit, and it is really true. The first thing is the people. Who are the people involved? What are their backgrounds? What is the team? Are they able to, of course, execute where they are today, but are they also going to be able to execute in the future? And if not, can they identify those gaps that they need to fill? So that gets more to that strategic plan. What is their plan? So we want to know who they are, what their strategy is. So we want to understand that. You had mentioned earlier about some of the traps that some of the brewers have fallen into. So everyone's got these wonderful hockey stick projections, right? But do they really have a defined strategy as how to enter a new market? And when should they be entering those markets, and how are they going to enter them?
Yeah. And when we spoke earlier, you mentioned, profitability is sort of number one on the list. Obviously there's a tremendous number of breweries starting up, not all of them profitable right out of the gates. Are there certain things that you look for as you're starting to assess each individual business that would sort of make or break an investment in a smaller emerging brand?
One, I think we would look at some of their business model. So how much of the business is being sold over their own counter versus how many local accounts they have. This is assuming they don't have distribution yet. To kind of see what that brand awareness is, or the potential success of that brand to be able to get outside of the brew pub. If they do have distribution, maybe getting a chance to talk to distributors, see what the velocity is on those kind of, are they really getting the sell-through that they're hoping for? Is it just weighted to, they keep opening new accounts, not getting the next rotation of the keg, and then they're just chasing another tap handle, another account.
Right.
So those would be some of the details that we try and get in to understand what's generating their profitability. To the point of profitability, again, as lenders, we're not equity investors. So as lenders, we need to get our money back, right? We're giving the money away very cheaply, right? And call it 5% just for discussion purposes. So at 5%, if we have one loan go bad, it's very hard to make up that principal amount, only returning 5% from the other loans. So profitability is key, knowing that the company is able to service that debt. Where an equity investor is going to look at an opportunity and they're going to try and get 10 times their investment. And for that return, they are willing to lose their investment, right? They know going in that I might get a 0 on this, but I might get a 10. Right. So when you are talking with your banks versus your equity investors, you do want to kind of keep in mind what's important to the banks as far as the ability to be repaid.
Right. Now, are there businesses that you're more inclined to lend to, or brewery businesses, depending upon, what they're looking to achieve, long term? some breweries are looking to stay much smaller, not looking for a ton of off-premise, distribution. Other breweries are looking to be more like a brew pub, do a lot of over-the-counter, as you said. Which ones do you favor more or less?
Which ones do I favor? Look, we're going to try to pick the guys that are looking to expand and continue to grow and maybe have some type of future event. But to answer the question is, we are working with brewers of all size. So we are working with the single unit brew pubs, and we can work with the CBAs of the world, if you will. So that really gets down to how much they can borrow and what the terms of the loan would be. Right. So Bank of America, as well as many other banks, are available and interested in this sector to do loans.
So I think one of the questions that I hear a lot is, what happens when interest rates go up? Right now, interest rates historically low. A lot of breweries relying on bank debt to expand capacity, to build out new facilities. Yeah. We see it every day. Yesterday it was Firestone Walker investing $15 million to grow their brewery in Paso Robles. So, clearly bank debt has been the preferred method for craft brewers, but I don't know if that'll always be the case. So what happens when interest rates spike?
Easy. You got to sell more beer. So the cost of capital, your cost of capital is going to increase slightly. So we'll put some operating pressure on the breweries with their free cash flow. As you mentioned, everyone's looking to invest capital already. So most brewers are already reinvesting the free cash flow they have into equipment. If rates start to rise, that's just going to mean less capital available for them to redeploy.
Right. In thinking about just sort of the dynamics in the space right now, clearly a lot of businesses entering. More than, I think, double the amount of breweries that are currently operating than were like 2 or 3 years ago. So over 4,000 now, yep. Just slightly over 2,000 like 2 or 3 years ago. So, certainly a lot of businesses out there trying to compete, a lot of different pressures, be it pricing pressures or tap handle pressures, retail shelf space. A lot of different things to consider. What does that do for a bank like Bank of America when they're trying to lend to breweries? Are there certain things that you guys are paying attention to in the marketplace that would prohibit you from spending more in the space?
So to address the first question, the 4,000 number comes up a lot. But the reality, most of that 4,000 are single unit, couple thousand barrel brew pubs. They're not really looking for bank debt. A lot of that's financed through friends and family, and they can support that. So it kind of really gets down to call it the top couple hundred brewers. That's really where most of the lending and the bank market is done, is on that higher tier of the brewers. So that group we follow very closely, and we're watching that. Certainly the competitive dynamics everyone's well aware of, particularly for tap handles and shelf space with all these brands that are coming out. So we're following that as to...
There is a train going by the way.
Yeah, there you go. I like that.
Or the pain train, one of the two.
So we are
right?
paying close attention to the competitive environment going on. Right now, a lot of that seems much more kind of regional than national, as far as some of the wars going on between some of the major brewers on market share. But we follow it closely, and the other area I think that competitive environment will bring might be what happens to craft pricing. The craft premium gap. Premium is probably the wrong word because it's confusing. The price margin on top of the premium beers. And what will happen to that gap as more supply starts coming on by all these local brewers. If the brewers start feeling a pinch, they've added, doubled their capacity, but their volume hasn't caught up yet. One way to move volume is to use price discounting.
Right.
So that's something we're watching, as many others are in the industry, as to what are the pricing dynamics going to be as the supply continues to come online.
And you would take those things into consideration before lending, or before
Yes.
banking a big expansion of.
Yes, that's correct.
All right. So what are some other risks that you would have if we get down to sort of just the individual brewery level, and you start assessing business plans and management teams and everything else, what are some of the risks and concerns that you have when you're actually, turning over millions of dollars to these businesses, many of whom are, brand new entrepreneurs, folks who, are not experienced business professionals?
So I mentioned one already, the people. Making sure that it's a solid management team that kind of has their head on their shoulders, has a good strategy, to execute on that. The other thing we'll look at is, as we start to lay out the financial modeling, how much more capital will they need, and between what they're looking for from the bank and their current investor base, is that enough to get them through the hurdle? Something that's become more important as the dollars are getting bigger would be the call it the ERP systems, the IT systems. How well are they aware of what the actual costs of the product are, what their margins are, their inventory control, ordering their cans and whatnot. So more about the operations. So we're also looking to get into that. So one of our concerns is that some of these guys may grow too fast and not be able to handle that from a resource side.
Interesting. So would you then prefer a business that has sort of a longer term, slower growth model, as opposed to businesses that are looking for that 50, 100% growth, year over year?
Yes, as a lender we would be. I think their equity partners would like the faster growth. So there's a balance there, and that's that's actually one of the things that a good management team is going to have to balance that, what they can do and what they should do.
Right. Interesting. So you've obviously banked a lot of different brands. What are some of the common mistakes and missteps that you've seen along the way, and also I guess some of the successes that you've seen along the way?
So I think a common mistake we're seeing are people entering markets too soon, new markets, new geographies too soon, not really having a well thought out strategy on how to enter that market or which distributors to use, or providing enough resources into that market. The old feet on the street, right? Making sure that they have enough support to really manage those new accounts and get the tap handle in and then keep the tap handle on. So I'd say, one is entering markets too soon without the right strategy.
So you would look for that in a business plan.
That's one of the things we talk about.
Yeah.
Who's your distributor in that market? Have you already sat down and have your plan on that? What's kind of the agreed upon marketing support you're going to get from them? Who are the major accounts? Which names do they already have that might be viewed as a direct competitor to your brand or positioning that you're going out with? So I'd say that's one of the common mistakes. The other one we've seen is maybe building the brewery capacity out too quickly. So if are they building too much capacity ahead of really what their demand is? But that's a little bit of a tricky balance, because the last thing they want to do is get caught short. Right. So if there's demand for it, they want to make sure they can supply it.
Well, you banked Golden Road. They certainly grew pretty quickly.
They did a fantastic job. Yes.
Yeah. So what did you like about Golden Road then? I mean,
so
if the concern is growing too quickly and they certainly scaled, very rapidly, what did you like about banking them?
So one, they had the right capital structure in place for where they were at. Their balance between debt and equity investments. What Meg did on the branding side, presence side, and securing those key accounts and kind of really positioning the brand out there as LA's leading craft brand. And then what Paul did on the back of the house as far as that the planning and the infrastructure, and he was on top of every number every month and could explain every variance that he had. So they actually, Golden Road was a great example of someone that really hit all the right pieces.
Right. And you got your money back?
It hasn't closed yet.
You're getting your money back?
Next week.
There you go.
Hold on, there's wood around here somewhere. Let me knock on it. Awesome. Well, one of the other things that I definitely wanted to talk to you about was just some of the other forms of capital out there. I mean, clearly we know that especially craft breweries tend to prefer bank debt as they're getting to a certain size. But at some point, they need to consider taking on additional equity partners. And we're seeing some things start to change in the space, certainly more private equity getting involved. We're sort of curious if the sort of venture capital guys are going to start looking at the space as well, and maybe sticking in large amounts of private money earlier on than they traditionally have. So what are some other forms of growth capital that brewers should consider? And what are sort of the upsides and the downsides of those?
Sure, we can touch on that. So first off, the options available to the brewers today weren't available even 2 years ago. I mean, it's just really incredible what's just happened in the last 2 years in terms of the funding options for a craft brewer. So look, historically it was friends and family, right? You were passing the hat and trying to secure some money and brew some beer and sell it and hopefully pay them back. As they were growing, private equity, which are these professional money managers that are given a pool of money by large investors to go and make a good return for them. The challenge they had was you could get the money into credit. It's easy to invest. It's hard to get your money back. So what's really happened recently with some of the M&A transactions that have occurred is that it's shown that there is the ability to get the money back. Not to knock on the private equity guys, but the joke is they walk into a room backwards because they always want to know where the exit is, right? But that's important for that's their job, right? They need to know how they can get that money back. So we have now seen some exits. So I think you're seeing much more interest from that community, that private equity community coming into the market. Now, of course, we're also, we've got one S1 filed for an IPO.
Yep.
There will be more coming. So if there is the ability to also access the public markets in an IPO, you're going to see even more activity, more institutional money coming in on the early stage, as you mentioned. Like maybe the VC funds now start looking at it. Okay, I'm okay putting a high valuation on this because I know I can get a higher valuation on the exit. And then, of course, we've got the global brewers stepping up and making some acquisitions as well. But I also think what we haven't seen too much of are the other kind of the craft-on-craft mergers. But I do think in the next 18 months, you're going to see a lot more of that activity happen, particularly as some of the folks get to a scale or they're looking, to double their capacity, and maybe it's better to find a partner, up north or across the country, as a way to combine, get some cost savings, get some, call it immediate brewing capacity, as opposed to having to build a facility and waiting a year and a half before you could actually start brewing.
Right.
So there's a lot more options coming for the brewers.
So those are all the options. That's what's happening.
Yep.
From where you're sitting, and I know you guys pay very close attention to the space, do tons of research and analysis. How are all these transactions going to impact the competitive landscape? Curious to get sort of a banker's perspective on it versus a brewer's perspective.
I guess there's a couple different ways you can look at that. One would be how will craft continue to do, call it, versus non-craft beers, or maybe craft style, because now we're kind of changing the definition of what craft beer is with some of the M&A that's happened. I think the craft style beers will continue to do well, and there'll be more market share opportunities. Although you are going to see, I think, much stiffer competition now coming from, let's say, a Heineken-backed Lagunitas. So the competitive environment is going to get much more serious. Right. in the craft aisle, in the stores, and for the tap handles and bottle placements in the bars.
Will that cause you guys at all to kind of slow down on the lending front, or what does all this activity
No, I don't think so,
because
there's still, again, I think the overall market share of craft is going to continue to grow. So we feel comfortable that there is, call it, we're okay with continuing to finance additional capacity into the craft sector. It becomes more of a case by case, who's got the right strategy, the right brand, the right people to be successful on it.
Right. So outlook sort of long term, still bullish then?
Still bullish.
And I guess, are there any factors that might derail all this great momentum that's been built up? Well, you mentioned pricing pressures as one.
So maybe the supply side, and we've got rumors of it just this last week with one of the major vendors in the space, kind of saying, hey, we've got to service our global brewers before we take care of the craft. So the other, of course, would be if the hop forward beers continue to be the style of choice, what might happen on the supply side with the hops. But I would imagine the hop farmers are planting a lot more plants now, so that may not be as impactful.
Right. And not just ingredients, I mean, everything.
Yeah, true.
Aluminum.
Yeah, right.
Glass. Any sort of things that you're paying attention to? Any like watchouts? Obviously, got the AB SAB merger talk.
Mm-hmm.
Got some Department of Justice investigations ongoing here in California. I mean, certainly just a lot of chatter out there about how competitive the space should be and kind of how things are functioning from both a wholesale side and a supplier side. So are you paying attention to that stuff, and what does it mean for you guys at the end of the day?
So we are tracking it. In general, if it goes as proposed, we won't see a change in the wholesaler side, right? So it'll get carved up. Kind of the speculation is get structured kind of like how Constellation did. So there won't really be an impact from the distributor side of it. Look, the craft brewers are already doing very well against a market dominated by two large players. So I think they're going to continue to do well as long as they make good product that the consumers want. That's going to be we're okay with it. So
Right.
we're feeling good about it.
Awesome. Well, I did want to leave some time for audience questions, if there are any. If you're a small brewery out there that has questions for Brian, we can pass around the microphone to you guys. Sort of open forum, and then I guess any advice?
Yeah, I got a quick commentary. So a lot of you that maybe don't have a bank loan yet, or maybe looking to it, or haven't dealt with the banks before, a couple things I'd say. One is the old Boy Scouts: be prepared. Kind of spend a little time, work with your if you don't have a CFO, your controller, or your outside CPA. Kind of have that budget figured out. Know where your numbers are on the margins on your balance sheet. Most banks are going to ask you, you're going to say, what can I give you? Most banks are going to say, give me 3-year historical financials and a 5-year projection, right? Most of you probably haven't been in business for 3 years, so that's hard to do. And then you're trying to figure out next week's payroll, not your 5-year plan. But just know that's the question they're going to ask of you. So if you have some of that sketched out, it'll make your discussion go much better with your banker. Talk to your colleagues. Talk to some of the other brewers. How did you do it? What was important, right? And more importantly, what bank did you use, or what resources did you use? So one of the great things about the craft community is it is a community. So one thing I'd say, before you start getting down the road with a bank or an equity investor, reach out to some of your colleagues that have already gone through it. Don't go with the first bank that you meet with. I'd absolutely suggest you meet 3 or 4 banks. In the banking world, we've got community banks, regional banks, and then the national banks, right? And those banks all will approach credits differently. So depending where you are, you want to find the right fit of for your risk profile to that bank. So again, don't just go with the one bank. Don't over-lever either. Don't take too much debt. Get a reasonable amount. Yes, you may have to give a little more equity up, but it's better than having to shut down. I guess would just be cautious on the over-leverage. And then lastly, get a good numbers guy. If you're a great brewer and you can make the best IPA, that's fantastic. No, if you don't know numbers, make sure you get a good numbers guy to work that. Again, this is the banker talking, so those are the things we're looking for.
Awesome. Brian,
thank you so much.
Round of applause for Brian. And if there's any questions, we have time for a couple more. No questions. All right. Oh, one question right here.
You mentioned the challenge of expansion into new distribution networks outside of your local or outside the state. You mentioned feet on the street, tap handles. Can you explain a little bit the correlation between on-premise versus off-premise as far as building that distribution outside your local area?
I would defer because I'm a lender. I'm not an ops guy.
Is on-premise driving off-premise, or do you see shelf placement driving off-premise?
I don't know. Any of the brewers in the room want to take that one?
So I guess the question for those that we got a live stream going as well that didn't hear it is, what's really happening out there in the retail landscape? Is on-premise driving off-premise or vice versa? Certainly both channels are getting more competitive lately. The old adage, right, is you build your brand on-premise, you drive consumers to go pick up the beer at a package store. In some of the breweries that you're working with, are they finding that to be true? Or?
Well, I would say, look, some of the smaller brewers don't have the ability to service the off-premise, so most of their product is really on-premise only. Once they get outside of their own location, it's really getting some of the call it the craft-focused on-premise accounts. So I think that's really been one of the reasons that's driven it, is because the first accounts are typically on-premise,
right,
which then builds that awareness and allows you to go to the retail accounts, or actually really go to your distributor to talk about how do we get, I've built up enough brand awareness, how do we get into some of the off-premise accounts?
Yeah, and I know Meg has some good intel there about some of the bars and the package stores just around here, around the brewery, and how well the brand sells through closer to home, and kind of what's driving what. So can always pick her brain as well. Any other questions before we let Brian off the hot seat here? Awesome. Well, we're going to take a short break before Meg and Paul from Golden Road come up here to chat about their exit and their sale to Anheuser-Busch. And in the meantime, you guys can fill up your glasses, get another beer. We'll come back here in about 5 or 10 minutes. Thank you.